In this video, we are doing section B of your business status paper 2. Section B comprises of 3 questions, and you are asked, or you'll be asked to only respond to 2 questions. However, for our lessons, we'll do all the 3 questions. Each question will be on the separate video. So our main focus today is question 2, which is business ventures. However, I'd like us to look at the note or the special note, as it is important for you as you're going to write on Friday. Clearly indicates the question number of each question that you choose. The answer to each question must start on a new page, e.g. question 2 on a new page and question 3 on a new page. So what is important is that when you're answering the question, if you're answering question 2, you need to clearly state that you are answering question 2 and you are answering question 2.1. In the instances where you still have few lines left in your question 2, you are asked not to add question 3 on the same page. However, you need to start a new page for the next question. Now let us look at the focus for today, which is question 2.1. You need to give 4 examples of long-term insurance. So you need to understand what are the long-term insurance. Long-term insurance are the insurances that you are expecting to pay premiums for the longer term, or they depend on particular occurrence of certain event. I'm going to make an example of the long-term event or long-term insurance. Let us say, for example, you are paying a funeral insurance. If you are paying a funeral insurance, the expectation is that you will pay until certain event occur, which is obviously is passing of you or the loved ones. So the expectation is that we're not thinking that you will pass away 6 months after the insurance. We're not sure whether you'll pass away 2 months or 3 years. So now it is classified as long term because number of people are paying this kind of insurance for the longer period of time until that certain event, which is death in this case, happen. Now let us look what we have in the solution in order to determine what are the other long-term insurance that you need to take into account. Now looking at the examples of the long-term insurance as our solution or marking card. The first one, it's endowment policy. So endowment policy, it's your life insurance which guarantees you the premium, the cashback after the certain period or certain event occurring. Then you have your life cover policy or life insurance. There's no major difference between the endowment policy and your life insurance. So in my case, I would have only stated one of the two. Then the retirement annuity, pension fund or provident fund. So those are your pensions or your insurance that you pay so that when you are older, you are able to continue living a good life as if you're still working. So it's to ensure that when you get older, you don't have a problem of you not being able to have medical aid, not being able to stay on good places. So it is an insurance for you when you get older or when you retire. The disability policy. The disability policy, the policy that you pay for the instances where you are unable to work, and the insurance will be giving you money for that period of time where you can't work and you'll still be able to living the life that you will be living should you be still working. Trauma insurance. Your trauma insurance are your kind of insurance which you normally get because you were in the situation that triggered the trauma in your body. So what are examples are things like you're in a car accident. Now you need to deal with trauma related issues like visiting counselors and stuff like that. So what are you paying then for that? You are paying trauma insurance so that if the traumatic event happen, you are able to get money to pay for the specialist that will assist you to calm the trauma. Funeral insurance, I have stated, it's your insurance with regard to in the event that your loved one passed away or you passed off, then you get the money to do your funeral service. Health insurance or medical aid, it is the insurance that you pay in case you need to see the doctor, the specialist, or you need to sleep in the hospital because of maybe accident or any other sickness that you might have in your life. So if you're looking at this, all this insurance that we have discussed, they are long-term in nature because we don't know for how long you're going to pay for. It is expected that you pay for the long term before you even use it. As I've made an example on the funeral, you expected to pay for the funeral for the long term before you could pass away. I'll make an example on my side. I've been paying for my funeral insurance for more than 10 years. That is a long period of time. That is why it's correctly classified as long-term insurance. And when you're looking at the life policy, it's the same thing. The disability policy, since my employment, I've always been paying for the disability insurance. Now let's look at the next question. The next question is 2.2. We need to outline the right of the shareholders. Before you can even outline the rights of the shareholders, you need to understand who are the shareholders of the companies. The shareholders of the companies are the owners of the companies. These are the people that took the risk in the business. They said, we believe in this business venture, therefore we want to put in our money in front so that the business can kick off. So these are basically the owners. They took the highest risk in the company when compared to the lenders and the preference shareholders. So the ordinary shareholders are the basic owners of the companies. I know some people would think directors are the owners of the company, but directors are not most cases, they're not the owners of the company unless they are owning shares in the companies. Directors are there to run the operation of the business on the day to day while the shareholders are still doing their own activities in their own time. Now, what are the rights of the shareholders? They have a number of rights. And one of the rights is the right to vote in the AGM, which is annual general meeting. All the companies have the meeting, which is called annual general meeting, where the shareholders, the directors, and other investors or important candidates, they sit down and discuss the operation of the business. So in that cases, they'll be looking mainly at the integrated report of the company. So in case there is a vote that is required, they have a right to that. So that is an example of the right the shareholders or the owners of the company have. Now let us see on the solution what are the other rights the shareholders have in the company. Now looking at the solution, the right of the ordinary shareholders. The ordinary shareholders have the right to vote in the annual general meeting. As I've already stated, on an annual basis, each company, they sit, the directors and the shareholders, to make the decision about the company and look at the performance for the past 12 months. They have a right to attend the annual general meeting to learn about the company's performance. As I've already stated in the AGM, that when the performance of the company, basically your integrated report and the financial statements of the company, are presented to the shareholders for them to have a view of how the company has performed during the past 12 months. They have a right to receive the interim and annual report. So the annual report and interim report are done in the company on the annual basis. The interim is done 6 months throughout the year, and the annual report is for the 12 months or the full 12 months period. So now they have a right to see those reports, have a feel and comment on them. They have a right to receive or to claim on company's assets in the event of bankruptcy after all the creditors and the preferential holders have been paid. So what do you see here? they have a right to claim on the asset, but they can only claim after the creditors and the preference shareholders have been paid. As I've already said, they take the highest risk in the company, therefore, they can only get the claim in the asset after the preferred lenders and the preferred shareholders have been paid. The other thing that is not here, but I'd like to bring to your attention, they also have right to interim and the final dividends, provided that the company is doing well and they can pay dividends to the shareholders. So that takes us to the end of 2.2. Now let us look at the next question. The next question is 2.3. Read the scenario below and answer the question that follows. So we are required to look at the scenario. You cannot answer 2.3.1 and 2.3.2 without reading the scenario. The scenario is about Parker Dentistry, or PD. Parker Dentistry has surplus fund and decided to invest a minimum amount of 1,000 as an initial investment. They will be penalized if the withdrawal are made within the first 12 months. So what is happening here? PD has the amount of 1,000 that they want to invest. And if they invest, they need not to withdraw in the first 12 months. If they do, they will be penalized. Now we need to identify the form of investment applicable to the scenario. These types of investment which penalize the investor if they withdraw within the first 12 months, it is Republic of South Africa retail saving bonds. Then number 2.3.2, describe the advantages. It is important to take note, students, that this is the advantages of the form of investment identified in the question above. So as we have said, this is a Republic of South Africa retail savings bonds. Now we need to state the advantages of it. I'll just say one of the advantages of this kind of investment. It has a guaranteed return as the interest rate is fixed throughout the period. So it is important for you to understand the advantages of the government bond or the savings retail bond. Now let's just look at the solution and see what we have there. So if you're looking at the solution, as I've already said, the form of investment. What the form of investment? It is your government bond or RSA saving bond. And in terms of the advantage of this kind of savings, there is a guaranteed returns. As I've already said, the returns are guaranteed because the interest rate is fixed for the whole investment term. The interest rates are market related. That is to attract more investors. If you're looking or making a research of government bond, you will know that it is market related. They make it market related so that they attract number of investors. The interest can be received twice a year, making it a viable investment option. Think about, you have an investment and you receive your interest twice a year. Isn't that is nice? It is nice. So it is an advantage. Investment may be easily accessible as cash may be withdrawn after the first 12 months. As we've already said, that the withdrawal before the 12 months has heavy penalties. But after the first 12 months, you are able to access your money. So you just need now to wait for 12 months. Thereafter, you are able to access your investment. It is a safe, or it has a low risk, as it is invested to government bond. Remember, government is the biggest entity in South Africa. So now if you're investing your money in government, you know government will have money because they would have collected tax from the number of individual, which is companies, people die, and you call it. So now it is a low risk because now you are investing this money to RSA government, who is a big entity in South Africa. It is affordable type of investment for all level of income earners, including pensioners. That is an advantage because even pensioners, they can invest in this type of investment on the basis of the fact that it is a low risk and a safe investment because the money goes to South African government, which cannot be liquidated. It is different from investing in the small banks because the small banks can close anytime. But when it's come to government, we expect government to operate in the foreseeable future because they collect revenue on a daily, monthly, and yearly basis, either from the consumers through VAT, either from the workers through PAYE, or even from income tax, VAT as well. So we know that government cannot just be easily liquidated, and even the pensioners can trust that they can put their money on this kind of investment. Retail bonds are easily or conveniently obtained electronically from post office and the National Treasury. No charges, cost commissions are payable. If you're investing, no one wants to pay commissions. So for that reason, you like this form of investment because of that reason. Interest is usually higher than for the fixed deposit. So the interest of the government bond, it's normally higher when compared to your other fixed deposit that you would meet with your traditional banks. Retail bonds are listed on the Cape Town bond market and the JSE. So the nice thing is that they also listed, they are publicly traded. Investors younger than 18 years, they can also participate in this kind of investment. However, they just need to have the legal guardian. So you have number of advantages that you have. You just needed to list the only two and justify why you are listing those two. And then you get your 4 marks. Now, let us look at the next question, which is 2.4. We needed to explain the difference between limited liability and unlimited liability. Now, let's first understand, what do we mean by limited liability? When we talk about limited liability, we're saying if you invest to the company and then you have your own asset, there is a different persona or personality between the company you've invested in as well as your own personality, which are your assets, can be your car, can be your house. So what does that imply? That implies in case the company is owing the third party and they can't pay the third party, the third party cannot come to you and claim your house or your car because these are two separate legal entities. The company is separate from you. For that reason, you have limited liability. Now, unlimited liability, what does that mean? It means your company and yourself are viewed legally as one. What does that mean? It means that the company, they cannot pay the creditors can come over your asset and take over your asset and sell them to the public. So now let's look at the kind of companies that we can look at. If you're looking at limited liability, it is your Pty Ltd, your limited, as well as your CC. But if you're looking at your unlimited liability, it is your sole trader or sole proprietorship, as well as your partnership. So those companies, it means if they are owing, they can come over you to take your money if the company can't pay. Now let's look at the solutions that we have. If you're looking at the solution, it is nice that you break down or you put the answer in tabular format. But that does not mean that if you don't put in tabular format, you're not going to get marks. It's just that it's make it easy for the marker and even for you when you write to know that if you said limited liability, it's this, and then unlimited liability is the opposite. Now let's look at the difference between the two. Losses are limited to the amount that the owner invested in the business. As I've already said, if the company is not doing well, you lose limited to the amount that you have initially invested in the business. You're not going to lose above the money invested. But when you're looking at unlimited liability, the liability of the owner to pay debt or claim is not limited to the business only. That means there are no limitation. The lenders, they can come over your asset should the business, the partnership, or the sole proprietor is not able to pay back the money. The owner's personal assets are protected against the debt of the business. As I've already said, in the case of limited, your CC, your PTY Ltd, your assets are protected because the creditors cannot come over your asset because the business can't pay. However, in case of unlimited liability, the owner's personal assets may be seized to pay the debt of the business. So it is the opposite of what we see here. In this case, they can take your asset in order to make sure that the debt of the business, which is partnership and the sole proprietor, are paid. It's applicable forms of ownership: companies that have a separate legal entity or personality. As I've already said to you, if you're looking at the PTY Ltd, you're limited. They are viewed as separate legal entity from the owners or the shareholders. However, when we're looking at the partnership and the sole traders, unfortunately, they are not viewed as a separate legal entity, does not have a separate legal entity personality. Now, let's look at the special note, which is important to you to understand when you're answering a question like this. The answer does not have to be in tabular format, as I've already said. You can decide how you write it, but obviously it's advisable that you use tabular format as it assists you to say limited liability is this, while unlimited is not this. So it helps you to also write faster if you use tabular format. The difference does not have to link, but must be clear. Same thing. Here we are linking, but you don't have to link. You can choose otherwise. But linking is much better because limited and unlimited liability are opposite. If you say one thing here, it has to be opposites on the other side. And then award a maximum of 2 marks if the difference is clear. Right. And then mark either limited liability or unlimited liability only. Right. So now let's just see, how many points did you have to write? You just needed to write 1 and explain for limited liability, and 1 and explain for unlimited liability. The other one that you have is for the benefit of you to practice toward your exam. Now let's just look at the next question. 2.5, discuss the impact of the free reign leadership style, what is normally called laissez-faire leadership style. Just to remind you what this leadership style is, it is normally a leadership. What are the advantages of it? The advantages of it is that the people are allowed to make decisions on their own. That means the leaders allows their subordinates to make the decision on their own without being assisted. It is looked as being an advantage or being good to give your subordinates a chance to make decision on their areas of expertise. However, on the other side, the new employees or lazy employees, they want to be assisted, they want to be guided. In that case, if you're looking on their side, it might not look like the good type of the style, right? So it has both advantages and disadvantages. So as we can see here, they're saying we must discuss the impact. I want you to remember, if we're talking about impact, we're looking at both the positive things and the negative things. This is not a concern or this is not to the advantage, but we're looking at the impact. And when we're talking about impact, the impact of things, it's when you look at positive and good things. And now, how do you go about answering the question that asks you impact? You have choices. The first choice is that you only discuss the positives and provide enough points, or you discuss the negatives and provide the enough points. What I prefer, and is always advantageous, is that you provide both the positive and the negative, obviously, and also provide sufficient points when you address both the positive and negatives. Now, I want us to look at the marking guide and see what we have, because that is why we're doing past paper. We want to learn. We can only learn if we see the marking guides, as those are the guides that will assist us to do well in our exams. The impacts of the free reign leadership style or laissez-faire leadership style. We have positive and negatives. As I've already said, you choose whether you focus on positive or negatives, or you go with both. I would always say go with both. And the reason I'm saying it is advantageous for you to go with both is because when I look at going with both, it shows that you understand the impact, doesn't only look at the negatives. So when we're looking at the positive side, employees are allowed to make decisions on their own areas of expertise. What is important is that they can make a decision on their areas of expertise, as I've already said when I was going through the scenario. Subordinates have maximum freedom and can work independently without having to consult the leader. So the other thing is that there is a freedom. Employees like freedom. They don't want to always be consulting their line managers when they are doing certain expert that they have expertise on. Subordinates are motivated when the leaders trust in their ability and skills to do things themselves. So now what do we see here is that the employees, each employees, they want to be trusted by their leaders. If they are trusted by their leaders, it looks good because it means that they are motivated. It means they will be motivated to even do better because their leaders trust their ability. If the leaders think of the leader that will continuously ask you, did you do this right? Did you do that right? This is not right. This is not right. You wouldn't be motivated. You'll be demotivated to do your work because you feel like the leader or your line manager doesn't trust you. Authority is delegated, which can be motivating or empowering to competent workers and increase productivity. If there's a delegation to the subordinate or to the workers or ground line workers, that increase productivity because the ground line workers, people are working in the production, they know exactly what to do as opposed to the leaders. Think about the leader that is not working in the ground, giving the wrong advice to the subordinates who are working on the day to day on that section. So now, if they are given a chance to work on their own, they will be motivated and that will increase productivity because they know exactly what they are doing. Subordinates are experts and they know what they want, can take responsibility for their action. So what is good about that is that the subordinates, they will take responsibility for their action because they know that no one would have reviewed their work. So if it's wrong, it is them who are wrong. So they want to make sure that they do everything and they do it correctly so that no one comes back and said, but what you're doing is not correct, or what you're doing, it's doesn't align with what you're supposed to be doing. Suitable for coaching, mentoring to motivate employees to achieve more better things. Competent employees of fellows experience personal growth and become self-reliant, confident in performing their work. So an employee that is allowed to do their own mistake and do their own work without being supervised all the time will become confident because now You will do mistakes and correct the mistake on his or her own. Will have the opportunity to review his or her work, which will make the employee become self-reliant. Individual team members may improve and develop leadership skill. If your line manager is giving you an opportunity to work on your own, and that way you will develop a leadership skill. And why you develop a leadership skill? And on the basis of that, you are leading yourself on every work that you're doing. And that's the way you develop the leadership skill. Let's look at the negative part because we are looking at the impact. The impact means the positive and negative. We have looked at so good and great positive part or advantages. Now let's look at the negatives and disadvantages and analyze them. So when you're looking at the negatives or disadvantages, lack of clear direction, leadership may be demotivating to employees. Some employees may feel like by the line manager or the leader not reviewing their work, it means that they lack direction. They don't want to do their work, and it could be the case in other instances. Employees can be held responsible for their own work, which may lead to underperformance. So what does that mean? It means that the employee's work is not reviewed by the senior, and if there's something wrong, all the wrongs will be pinned down to the employee. So if the employees receive negative criticism on their work all the time, then they will end up underperforming because of unhappiness at work. That could lead to conflict when some team members act as leaders, dictate to other work members. So now it looks like any team members in the group will act as leaders, even though they are not leaders, because now they are asked to do their own work. So now they will even feel people in their line, they are under them when it's not the case. So it is important in some instances that there is a leader that supervises all the subordinates to avoid subordinates leading other subordinates on the same line. Then when you look down, workers are expected to solve their own conflict situations or disagreement without involving the leaders. So here's the problem. Now the subordinates have the problems or they have the disagreement or they're not sure of what is the next step to take. They will have a conflict which cannot be resolved because the leaders are not involved on the operation or on that project. Productivity may be compromised with a lack of tight controls over workers not meeting deadlines. Right. So productivity obviously may be compromised if the workers are also reviewing their work. It takes time to do the work and also review, meaning to say now the deadlines might not be met. It might be met if the workers they're only doing the work and there's a reviewer that is assisting them and guiding them on any errors that would have taken place. Product might be low. Employees lack necessary knowledge and skills. So here's not a problem. There's a new employee that just joined the workforce or the company. They might not know everything. So if now they are not guided or they're not supervised on their work they're doing, the productivity would be low because they do not have the expertise that will enable them to work faster on their project. The next question, 2.6, read the scenario below and answer the question that follow. So you're going to read the scenario together and then we're going to look at the question that follows. Now, if we're looking at what we have here, we have Oshu Limited or QL. Oshu Limited requested Sam, the financial manager, to present audit head financial statement to various stakeholders. Sam used a special pen to mark note while images are being displayed. The audience were given hard copies of this presentation for future references. Identify two visual aids used by Sam which is the finance manager, motivate your answer by quoting from the scenario. So the visual aids is not coming from the scenario, but you have to state which visual aids that Sam used, and then you need to motivate why did you say this visual aids applicable in the scenario. So the visual aid you would have started during your lesson in class, and then the motivation is coming straight from the scenario. Use the table below as a guide to answer question 2.6. So we have visual aids and the motivation. Before we even look at the scenario, if we are told that someone is displaying something, it means that there is a board that it is displayed on. It could be smart board or sometimes interactive board. You can call it anyway, but at the end of the day, there is a board that this is displayed on, right? Because it's using pen, it means it's not your chalkboard, So it is a smart board. It's not things like your chalkboard. And then the handout of copies, it means those are handouts. You can call it handout or brochures, whatever you name it. And then when it's come to motivation, for the first one, your motivation is what you see here because Sam used the pen to make note while image were being displayed. The audience were given hard copies of this presentation for future reference, which means they were given handout. Now let us look at the solution or marking guide and see what we have in order to conclude on this question. So visual aid and the motivation at 2.6. As I've already said, the visual aid, it's interactive whiteboard or smartboard. It is not a chalkboard because it's not using chalk to present the financial statement, but it's using pen while the results are being displayed. That means there is an interactive board or smartboard that we used. And the motivation is because Sam used the pen to make note while image are being displayed. The second part, the handout, which is your visual aid, the flyers or brochures. The audience were given hard copies. So the hard copies that were given for the presentation, it's handout, can be flyers, or even the brochures, whatever you call it. But it must be in line with those words. So let's look at the special note because this is important for you to understand how you're going to get marked. Number one, mark the first two only. So since you asked for two, you have to put the next only two. And then once you put only two, you need to take note that you get 2 marks just for stating the visual aid. And then you need to motivate. Special note number 2, the answer does not have to be in tabular format. You can answer in your own ways as long as you're going to state a visual aid and motivate why you've selected that visual aid. Award marks for the visual aids even if the motivation were incomplete. So if this is correct, even if this motivation is not complete or incorrect, you will still get your 2 marks. However, do not award mark for the motivation if the visual aid were incorrectly identified. So now what happened? The motivation is correct, but your visual aid is incorrect, you'll get 0 because you're supposed to get a visual aid correct first before you can motivate. So you cannot get this 1 mark and other mark, which is 2 marks, from the information you got from the scenario if you couldn't give the correct visual aid. Let's look at 2.7. 2.7, we need to discuss any 2 principles of insurance. What are the principles of insurance? Obviously, those are the terms that you normally hear in the insurance. I'll give you an example. The first one will be insurable interest. What are you insuring? Is the item that you're insuring have a value that the insurer can use in case the certain event that you're insuring happen? So those are just examples. So those are kind of terms that you'll hear in the insurance. It does not have to be long-term or short-term, any kind of insurance. What are the two principles of insurance? You just need to stay two, not a lot. Now let's just look and see the terms that we have. Obviously, we would have studied that during your first two terms before you go right on Friday. But now let us see what we have, and then we can conclude from that. Now, looking at the solution that we have here, principles of insurance, it's indemnification or indemnity. Just by stating that, it's 2 marks. This is a kind of term you would have studied before you go and write on Friday, which is 13th of June in your exam. Usually applies to short-term insurance as the insured is compensated for the specific or proven harm or loss. So indemnification is normally in your short-term insurance, and it means that you will be compensated for the loss incurred. Insurer agrees to compensate the insured for damages or losses specified in the insurance contract in return for the premiums paid by the insured for or to the insurer. So what does that mean? You pay premium on a monthly basis, and those premium are there to assist or protect you in case the insured event take place. So this is a compensation. You get a compensation in case the damage or losses has taken place. Protect the insured against the specific event that may occur. The reason the insurer are insured is because they want to be indemnified in case of the event. So this is a protection. So it talks about the protection. Pays off from the insurance companies or insurer will only be made if there is a proof that a specified event took place, if the insured can prove the amount of the damage. So now what happened? Let's say, for example, you were in a car accident. So what normally happen, they'll say they need a police report. You'll have to go to the police station and state exactly what happened. They will need that report from the police when they're making a decision on the claim. Now, looking on the other side, they will take your car to their assessor to assess how much need to be paid or how much need to be paid to the person that will fix the car. Either they paid to you or they paid to the person that will be fixing the car, which is mechanic. The amount of indemnification or compensation is limited to amount of proven damage. Let us make an example. You are owning a Mercedes-Benz, and the Mercedes-Benz value it insured at 1 million. And then you happen to be in the car accident. In that car accident, your damage is only maybe your 100,000. The insurance is only going to pay the 100,000 for fixing the car and not the full value of the car, because the car will just need to be fixed to go back to where it was. It doesn't matter that you're insured for 1 million, because your car just need to be fixed by 100,000. That's what the insurer is going to pay. The insured must be placed in the same position as before the insurance take place. So the reason that you're insured is because you want to always be in the same position as if there was no issue of loss or harm in your assets. The next term that you'll hear in the insurance space is security or certainty. The reason that you're insured is because you want to have security in your asset and be certain that in case of any loss, your asset will be paid for. It applies to the long-term insurance where the insurer undertakes to pay out the agreed amount in the event of loss of life. So that's things like your life cover or your funeral cover. That is for the long-term insurance. And we already explained the long-term insurance in the first question, where we look at the type of the long-term insurance. And we know funeral and life cover are your long-term insurance. So the certainty and security in case of loss of life, you know that it will be insured. Predetermined amount will be paid out when the insured reaches a predetermined age or get insured due to predetermined event. Aim to provide financial security to the insured at the retirement or dependent of the deceased. So you can provide any other types of answer. But in this instance, you just needed to give principle, get 2 marks for the principle, and then by discussing the principle, you get 1 mark. So all you needed is just one principle as well as another one for the description. Most good faith. Most good faith, it means that no one is lying to the other. You're doing what is right and what is true. So those are the terms that you will hear now and over again in the insurance space, or those are the principles that are important. What does that mean? Insured has to be honest in supplying details when entering the insurance contract. So what does that mean? You have to state the truth. If you're insuring the house has cracks, you need to state that your house in this side, it has cracks. So that the insurer, they know exactly what they are insuring. If your car has damages at the back, you need to state in this side of the car by showing picture, there are damages in the car. Do not lie. Do not act as if there are no issues in your car, then subsequently go to the insurer and claim. Both parties, or insurer and the insured, must disclose all relevant facts. As I have stated, any facts that you believe will be important for the insurer to know or the insured to know, you need to disclose. Insured must disclose anything that may affect the extent of risk. As I've stated, the cracks in the house might affect the extent of risk, because if the house has cracks, it means that it has a high risk compared to the house that doesn't have cracks, because the house that has cracks can be easily destroyed by either the wind or any kind of weather condition that might affect those cracks. Details, information supplied when claiming should be accurate. Now the event has taken place, which is insured. Now you need to make sure that any information that you provide is correct and accurate or true. So what does that mean? It means that you're not gonna go and lie and say, for example, um, your car was maybe destroyed at the back when it was only destroyed in front only. You can't include the back. If the accident and from the date of insurance, it's only the front part. Then let's look at the last one. It's insurable interest. As I've already stated to you, an insurable interest is what you are insuring and it is at what value. Insured must prove that he or she will suffer a financial loss if the insured object is damaged, lost, or ceased to exist. The insurable interest must be expressed in financial terms. Insured must have a legal relationship with the insured object. Right. So what do we see here? You cannot look at the car in a baby in your yard that is not working, that has no value, it's old, not working, never used, and then you said you want to insure. How are you going to insure? Because that car has no value. It's not used. It's not that it's not used because you have other cars, because you can't use it. So it has no value. You are not using that car. So why are you insuring it? So the insurers will want to know the car it's working before they can insure it, so that they know how much or what is the worth of that car. So the other part is you have to have legal relationship. You have to be an owner of the asset that you're insuring. You cannot insure the asset that you are not the owner of. So those things are very important for you to understand. Now let's just look at our last question. Our last question is 2.8. Advise presenter on the aspects that they should consider when designing multimedia presentation. Not even thinking multimedia presentation. Ask yourself, advising someone that is doing a presentation slide, what are the things you'd say? The words must not have, must be, it need to be grammatically correct. The grammar there or the grammar used need to be correct. The colors used need to be bright because this is a presentation to the multimedia. There should be headings. So those are kind of examples of the things that you need to think about. If you're looking at the slide, what are the kind of things you'll expect to see on the slide? Bright colors, links that will take you to where you want to be. There are a number of things, but before we waste the time, let us see what we have in the marking guide, as there will be a number of solutions that we have which will assist us. Here are the experts that should be considered by the person that is designing a multimedia presentation. Start with a text heading, which forms the basis of presentation. Headings are very important because it lets the reader knows what will be discussed in that particular slide or in the entire presentation. Select the background to complete or enhance the text. Choose image that may help to communicate the message. For example, if you're talking of the numbers, then you have calculator next to your slides or in your slides that shows that you are talking about numbers. If you're talking about dates, maybe you'll have calendar, a number of things, which image that is relatable to what you're communicating to the readers or audience. Include or create graphics to assist information which is conveyed. So use graphics in your presentation. Probably you're talking about the formality at the workplace or what is required to be worn at the workplace. Then you're going to have to show the people that are wearing suits, that are wearing formal goods. Okay, this is how we expect you to dress up. Add special effects, sounds, pictures to make interesting for the audience. So if you're making a presentation, you want to have pictures, the sounds, so that it will be interesting. You see in some of the presentation, in between, they'll show you the video so that you remain interested in terms of what is still going to happen. In the middle of their presentation, they will just show you the relatable video that will be interesting, maybe make you even to laugh. Create hyperlinks to allow a quick access to the files, documents, or video clips. So in the huge presentation, it is always good to have hyperlinks which assist people to jump pages and go to where they will find interest. Use legible font and font size to make it easy to see and read. You know how far you be to all the audience. The more audience are far from you, the font size need to be bigger. Keep slides and image graphs font size by not mixing different styles and colors. So now your font size, styles, and colors, you need to keep them consistent throughout your presentation. Make sure there are no language or spelling errors. As I've already stated, the grammar needs to be correct. Because if there are any spelling or language errors, then the reader will not be interested in your conversation because it seems like you don't know what you're doing. Use bright colors to increase visibility. Structure information in a logical sequence so that the audience can easily follow the content and presentation. Limits the information on each side by using keywords and not full sentence. If you're presenting, you cannot be able to state the full paragraph or the full sentence for everything. Other things need to be keywords, which will remind you in terms of what more you need to say to the audience. That takes us to the end of this question, which is question 2 in section B. I wish to say all the best in your exam on Friday. Please follow me and subscribe on my YouTube channel. It's Economics 199 and follow me on TikTok at the same name, Economics 199. Bye.